Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in. Good afternoon. Joe Caccera with Real Estate Radio Live. Thank you for those that are continuing to follow us on the live Facebook feed. We appreciate that very much. On and off, we have some technical difficulties, so we apologize if the sound is not quite there sometimes on the live Facebook feed, or maybe we're moving around like we're in outer space, but be sure that we're fixing it and working on it, and we will get it right. So thanks again for doing that. Thanks again for checking in. We are with you typically 3 to 4 days a week. We do this live feed on Facebook, and however, this is a podcast. So most importantly, thank you for watching the feed, but we'd love to have you listen to download the podcast and listen to the show in its entirety or pass it along. You could do that by going to our website, RERL-1607-Understanding. You could go to iTunes and just type in Real Estate Radio Live. You could go anywhere and type in Real Estate Radio Live, and that icon will come up to download the podcast. We'd love to have you do that if you have not done so, and please share it with family, coworkers, and friends as well. The focus is always the same of the show. It's education and information. We have a lot of different topics in and around real estate. However, we also have some unique shows where we give back to the community. We have a show we do weekly with Jack Russo, who is an attorney, and we discuss starting businesses and growing businesses is really a big interest in Silicon Valley. So we like to say we diversify pretty well, I hope. Anyway, today we have our reverse mortgage expert in. We like to bring Bill Benson in every once in a while to give us an update on reverse mortgages, but more importantly, really just to continue to educate you, the consumer, on reverse mortgages. I think that as long as they've been around, still there's some myths and there's some misconceptions of them, and maybe there's some people just don't quite understand how they work, who they work for, and certainly they're not for everyone, but for the right people, they're outstanding programs. So we're going to talk about that today. Welcome in, Bill. How you doing?
Doing good, Joe. Thanks for having me.
Good to have you back representing the reverse mortgage group.
Okay. Well, I like doing it because I'm one of those seniors.
You are.
Myself, yeah.
That's the, remember the commercial, the hair club for men? That's what everything, it's like, I'm not only a customer, I'm a user or something like that? Well, how does it go?
Well, yeah, I'm not a user of that yet, but I probably will be pretty soon.
Well, but you are the reverse mortgage is my point.
Yes, I am.
Yeah. You're a believer, but you also believe it so much you have one, is my point.
That's exactly right.
Yeah, absolutely. Why don't we get started as we normally do, Bill? If you could give the listeners a little bit about your background and then, the time you've been doing reverse mortgages, and then we'll jump into our topics here.
Well, Joe, I've been in the real estate and mortgage business since 1973.
Okay.
Kind of ended up in the mortgage business primarily, but the last 12, 15 years I've been concentrating on reverse mortgages. And they're a great tool for a senior at the retirement age who wants to stay in their home and continue to live comfortably. And that's the original intent by the federal government probably 25, 30 years ago now when they started them. And while that was the original intent, there are so many more uses for them now for seniors to maybe do things for family, travel a little bit. And we found lately that more and more financial advisors have recognized they're a good tool to use along with other financial investments for a retirement plan for quite some time.
Right. So we're going to talk a little bit about, for those, I'm a big believer in keeping things as simple as possible and common sense, but it's always a good idea to give a frame of reference. And so what I mean by that is just so to give people kind of an idea, the reverse mortgage, it kind of is exactly as it states and says, and that most of you are familiar with what we call a forward mortgage, which would be, let's say, a 30-year fixed. You buy a home or you refinance, and you get a 30-year fix. It's a very common loan, and it's fixed for 30 years, and you pick an interest rate, and for that interest rate, there's a cost to that rate, and you make a payment, and some people keep it for 30 years, some people don't refinance. There's all kinds of things we do. I think in the Bay Area, we change our loan on average about once every 7 or 8 years. So anyway, that's a traditional, conventional forward mortgage, and you also hear about 5-1 ARMs, 7-1 ARMs, home equity lines. These are all forward mortgages where you get the loan, the bank lends you the money, there are terms associated with that, and you make your monthly payment, and you have to make your monthly payment. You can't miss it. If you do, it affects your credit and on a lot of other potentially negative things. If you miss enough of them, they'll foreclose your home. Hopefully that will never happen. But the reason I want to explain that is that's how the traditional mortgage works. And most people may know that, but some people do not that might be listening to the show. So we're going to have Bill, again, kind of start by describing the way reverse mortgage works. Bill, if you could kind of take us through kind of the nuts and bolts and the ABCs of how it works, and then we could get into, after that, we'll get into all the different uses that people, usually might want to consider the reverse mortgage.
Yeah, happy to do that, Joe. Reverse mortgage is a mortgage just like a forward mortgage, except that there's no obligation to a payment. There is interest rate on the loan, but the interest accrues.
Right.
The senior can, once they have their reverse mortgage, if they're able to and want to, they can pay the mortgage down or make the interest payments on it so that it doesn't, it's negative amortization loan. The principals, if they don't make the payments on the interest anyway, the balance will gradually go higher. The amount that they can receive on the home is dependent upon the value of the home.
Okay.
The interest rates, obviously, the more value there is, the more that they can receive.
Okay.
The interest rates, the lower the interest rates, the more they receive. And their age, the older they are, the more that they'll receive.
Okay.
There are two basic reverse mortgages. One is the government program, which is an FHA program. FHA insures the loan, and that's to protect the senior as well as to protect the lender in case of a default. Now, the only way the senior can default is by not keeping their taxes current and not keeping their homeowner's insurance current.
Got it. Okay.
And they're expected to keep the home in reasonable shape.
Right.
Once in reverse mortgage, the senior can use that money for anything that they want.
Okay.
Okay. And they can receive the money in a variety of ways. They can get monthly income for their life, or as long as they live in the house, a line of credit, or a lump sum payment, or a combination. In some cases, all three.
Right.
So it's a very flexible tool. You have to be careful. We're talking about a loan against your home, which in most seniors' case is the largest asset that they have.
Right, right.
It's not something to get the money and go play with, gamble with, but for good use and to help a family just to live more comfortably, maybe help kids with their college education, their grandkids with college education.
Right. A lot of uses for that. So the typically, I think it's 62, right? You have to be at least 62, correct?
Have to be 62 or older.
Yeah, and you mentioned that you get more money, kind of a sliding scale as you get older. So someone of, say, 78, 80 years old could potentially get more than someone that's 62, 63.
Exactly.
Okay. Talking about, is there any kind of qualifying, Bill? I know years ago there was none, and it was purely on the home or the property itself. I think a couple of years ago that changed somewhat, right?
Yes, somewhat.
Yeah.
We've always had to get credit reports.
Okay.
But the primary reason for that a few years ago was simply to be sure there wasn't another encumbrance on the home that didn't show up on a title report. But the problem that they ran into was that during the last time that the markets broke and we had a real financial crisis, they actually had to foreclose on some seniors because they were not keeping their taxes in place. They couldn't afford to, or keep their homeowners insurance in place.
Right.
And the law says then that the lender has to foreclose if they cannot bring those current.
Got it. Okay.
And so they look at it a little more closely.
Mm-hmm.
If they feel that there's a problem, or there could be a problem from the information that we give them, they might be set aside from a line of credit, or hold some money back from monthly income, so that when the taxes and the homeowner's insurance come due, they can then pass that money along and make sure that the seniors do keep those current.
Okay. So the other thing that I want to bring up, if you've been following the show, you've heard me talk about this several times, and I think it's always worthy, especially when we're having this conversation about reverse mortgage. So let me tell you what happens quite a bit in my business. I'm in residential financing. I think most people know that by now. If you don't, shame on you, or shame on me maybe. Maybe I don't talk about it enough. But anyway, what I see a lot, and so does Bill, and anybody in this industry here, especially in Silicon Valley, I'm sure it happens throughout the United States, here's what we see quite a bit of. I'll get a call or I'll meet with a client, and, they're in their 60s or 70s or maybe even 80s. This is kind of a typical profile. They own the home outright, possibly, or owe very little on it. Their home may be worth $1.5 million, $2 million. Fixed income. In some cases, nothing but Social Security. Other cases, maybe some investments, maybe a pension. But what happens a lot is most of you have heard this term, house rich and cash poor. That happens a lot, and it's because we have, who knows the number, but there's got to be millions of people who worked extremely hard their entire life in some career, some business. They decide to retire, or in some cases, maybe they don't. Maybe they're on disability, or or health, or there's all kinds of reasons why they don't collect the income anymore. But we see that a lot. And what we see is these people have this home, and all this equity is kind of locked up in the home, but yet they struggle to sometimes live month to month, or maybe the roof's leaking, and they need to get a new roof, but they can't afford it. I mean, that's a reality. The interesting thing is, you think about this, if you could just seriously, this is some of the stuff I know Bill thinks about, but think about a person that owns a $1.5 million or $2 million home, and the roof needs to be replaced, and they can't afford to do it. And that's a reality, right? I mean, I'm not saying with everybody, but that comes up. These types of things come up.
Yes, it is, Joe, and I should have mentioned it before. That's one of the primary reasons.
Is it?
Uses for reverse mortgage.
Right.
And we also talk about aging in place.
Right.
Along with that, maybe comes some improvements to the home with that in mind. Maybe some railings, wheelchair ramp, that sort of thing, just to make the house more comfortable for seniors as they age there.
Yeah, and again, just Bill described it to you, but the beauty about the reverse mortgage, if it's right for you, is that you could have access to this money which is yours because it's in your home, your equity, you built that, your investment. Remember, it's yours. And so you could access capital or money to make that replacement, add the additions to your home, do really anything you want. And again, the important part about this is you have no monthly payment. No monthly payment. And so for the reason we bring this up and talk about in detail it is because it's important that everybody understands how this works. And it's really one of the few ways, Bill. I know there's some equity share programs out there I know are becoming more popular that for people of all ages. But the bottom line is this is really, in some ways, one of the only ways to access capital from your home without accruing a monthly payment.
That's right, Joe. Another advantage to it is as you draw the money from your own home.
Good point, yeah.
There is no tax hit because you're really borrowing money from yourself.
Good, yep.
The only tax advantage comes when you move out of your home permanently. And then the loan then has to be paid off. In most cases, it gets sold. But in some cases, if family for instance, wants to keep it, they can. But if the home gets paid off at that time, that becomes a tax advantage to you.
Oh, okay. Got it. All right.
Because the interest that you paid or that you pay on the loan is a tax deduction.
Very good. All right. So let's just go through a number of the things that people could use this money for, Bill. I mean, I know just kind of highlight, you talked about repairs of the home, remodeling, maybe modifying for access for handicap or some kind of form of disability of some sorts. We talked about all those, but they could also use it to, pay for a child's education. They could use it to pay down debt. They could use it to all kinds. So just go through a list of things.
One of the primary reasons is seniors at retirement quite often still have a mortgage on their home.
Yeah. That's a good point.
That's an obligation they have to pay for monthly.
There you go.
And that gets paid off automatically when they get a reverse mortgage, because the reverse mortgage has to be in first position.
Right.
So it pays off any mortgage that's already there. That immediately gives the senior cash flow because he doesn't have another mortgage payment to make. I mentioned traveling, I think. Talked about educating kids. I've got a granddaughter that's just getting ready to graduate from USC. I was feeling sorry for her parents, my kids, who had paid for that. I didn't have to help with that one.
Well, student debt, I think last I saw, it's a bigger number than, I think I could be wrong about this, but I think there's more student debt than mortgages throughout the United States, or some crazy number like that. It's up there.
It's huge.
Yeah.
But another thing that I touched on, but I didn't complete, is the FHA program has limitation in that they set the maximum value that you could, if you've got a $2 million house, they set a maximum value on the house by county throughout the United States. Now, fortunately, here in Silicon Valley, we're in one of the highest cost areas, property value-wise.
Right.
But they still limit the value. Now, get this, is going to upset some people to, I think the figure now is $726,650. That's not realistic a lot of times around Silicon Valley.
Right.
But quite often, though, a senior who has a $2 million house, it's fine for them if they only own $100,000 now and they want to get that paid off.
Right.
But there's also proprietary mortgages now. They can go up to $4 million.
Wow, okay.
And that gives us a lot more flexibility for those seniors who have that value in a home, and they're numerous.
Yeah.
As you are well aware, Joe, being in real estate around here.
No, that's a good point. So I want to come back to something you said earlier, which is really important. So that someone has enough equity. Again, we'll just use the scenario. Let's say they have a home that's worth $2 million and they have a $100,000 mortgage on it, and they want to not only get rid of that $100,000 mortgage, but they want another, maybe an equity line of $200,000. So you're saying they could do something like that. Obviously, it has to do with the equity, but they could pay off that mortgage, eliminate their monthly mortgage. In addition to that, they could access more capital over and above that if they wanted to.
Yes, they can. Yeah. On the jumbo mortgage, the proprietary mortgages I mentioned, I'll give you a quick example. I'm working with family right now, and when I work with seniors, I quite often am working with families. I always recommend that they bring their kids into it so that they know what's going on.
Right.
And that's for their protection, too, because of the scams that go on. They go on in reverse mortgages, too. Not like they used to, but they're still there. But Mom has a home that's worth about $2 million, and she's late 80s. We're setting up a line of credit of about $800,000. She's at the point now, she's mentally competent, but she has Parkinson's disease and needs home care 24/7, which is very, very expensive. Fortunately, she had good insurance policy, too, good health insurance policy. But it's really a drag, and going through her reserves very, very rapidly. But this is going to, we ran figures out, this is going to take care of her for the next 10 years anyway.
Wow. Yeah. Now, this is a really, really important program to understand, and Bill will tell you all the time it doesn't mean it's for everyone. Matter of fact, it's not for everyone. It depends on the situation. But it is for someone that, and I see this, and it's not meant to be dramatic, but this is real. And what I mean by that is, we talked a little bit earlier, Bill, but there are people who, obviously they're older, so we just assume because we're in this business everybody understands it, but they don't. Number one. And number two, if you have someone in their 60s, 70s, and 80s, they may not have had a mortgage for 30, 40, 20 years. Who knows? Maybe for a long time. So to think that they automatically know about reverse mortgages, this is why this is really an educational process, and that's why I always say when I do these shows, quite frankly, most of the time someone might be listening to this and it may not apply to you. But I always say, think about it. If you're listening to this show and you have a aunt, uncle, mother, father, grandparents, great-grandparents, neighbors, friends, coworkers, that you think, gee, maybe I wonder if they know about this program. That's really the message I want to get across today, too, is share it with them. Have them call us, have them call Bill, and get some more information about it. And I guess my point, Bill, talked to it a little bit, is that you'd hate to see someone kind of I don't want to say a slave to their home, because that's probably not the right wording, but, stuck in their home, feeling like they have nowhere to go or no options when they just may have some options.
You're exactly right, Joe.
Yeah.
The case that I just talked a little about, the lady wants desperately to stay in her home, and so that fit her situation. But it's a shame to be tied to your home.
Yes.
And not to be able to do anything else.
I was going to use, I think prisoner was the word I was looking for.
Yeah, right, yeah.
In your own home.
But I run across it all the time, and so often seniors, they've heard bad stories about reverse mortgages, and they're very, very cautious. They'd love to pull some money out of the house and do whatever they want to do with it, but they're tied to that house. And a lot of them don't want to discuss it with their kids.
Yeah.
I absolutely recommend every senior thinking all about it. If you're even thinking about it, why don't you talk to your kids about it?
Yeah, right.
And see what they think about it, or if they know anything about it.
Yeah. The other piece is that comes up a lot, and we've touched on this before, but we always want to try to touch on it each show, Bill, is we all know the cost of these senior care facilities, whether they're minor, major, full care, partial care, there's all kinds of different levels. But in the Silicon Valley, I know dozens of families that have their parents, grandparents, or some family member in these places, and they are very, very expensive. I mean, we're talking $5,000, $6,000, $7,000, $8,000 or more a month, right? So here's the other thing, I guess the reason I'm bringing this up is depending on the equity in your home, this could be another plan to help people stay in their home longer, correct? I guess is my point.
Exactly.
Yeah. So potentially it could be instead of moving them to a senior care center or something, this is an option, and it could be temporary. It could be another for 4 or 5 years or who knows. But the idea is that it may prolong that process.
Well, it will keep them in the home that they probably love.
Yeah.
Have lived in, a long, long time. And so many seniors really would prefer that.
Right.
Others might not. Others might want to move into a senior facility.
Yeah. We have just a couple minutes left, but one thing I want you to touch on before we leave, Bill, I know that this is the other piece that a lot of people don't know about is the reverse purchase. So maybe if you can, just for a minute or so, give them an idea that this could be used to purchase home, because a lot of people obviously think of it accessing capital, but they don't necessarily think about it as a tool to purchase.
Well, here in the Valley, it could work very, very well. Kids are gone. They don't need an upkeep on a swimming pool in a big yard anymore.
Yeah. Starting to sound familiar.
Well, Joe, your hair's starting to turn a little gray. When are you going to be 62? Okay.
Not for a while.
So they want to step down.
Yeah.
And in doing that, there's going to be a tax hit, but they'll have cash left over. Even if they have the cash to pay cash for a house, they might be better off by putting a small down payment and using a reverse mortgage to purchase something that suits their needs and have cash left over for a good, secure, income-producing investment.
Right.
And they are gaining in popularity. It's a very small part of the reverse mortgage business, purchase mortgages. But at the same time, that's growing. And the reverse mortgage business, folks, is a very, very small part of the overall mortgage business.
Yeah, right.
But they do work. They make a lot of sense for a lot of people.
Yeah, they do. Before we leave, Bill, someone out there is listening, or maybe they're passing this along and they want more information, what's the best way to contact you?
Best way to contact me is pick up the telephone and call me.
So old school.
Yeah, and I'm local. And my number is area code 408-378-6603. And if a nice lady answers the phone, that's my wife, because I work from a home office.
Plus, she wants to make sure you're working. So.
Yes. No. Actually, she wants me out of the house.
All right, Bill, thanks again. It's always good having you back. We'll have you back in a couple months to give us an update again.
Thank you, Joe.
Yeah. Thank you, those, for checking in today. We appreciate it very much. And again, for those that are following us live on Facebook, we thank you for that. Remember, for more information about the show, the podcast, you could always go to RERadiolive.com. If you need to reach me during the week, 408-838-9060. Take care. Have a great day.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.